Hi everyone, welcome to this channel, Finance with Bookie, and I'm happy you're here today. And on this channel we'll talk about personal finance, career, and how to make money generally. And today I'll be talking about factors you need to consider, or the things you need to consider before investing or putting your money into the stock of companies, right? Why is this important? I'm talking about this today because recently somebody reached out to me and said, my friend told me to invest in this company, to buy the stocks of this company, and I bought it, and now the shares are down and I don't know what to do. I've lost so much money. I don't know how to start, and I really hate investing now. I don't think it's for me. I think I'm not going to be able to do this anymore. Investing in stock is scam, it's not good, and all of that. And I'm like, whoa, stop. The problem is not about you buying the stock. The problem is that you were ignorant of what you were doing. Yeah, because you don't just buy stocks because your friends ask you to do it, or because you're in a group and they're asking you to do it without you not doing your own research. And that is where the problem is. Now, most people don't even know what to look at for when they want to invest in a company. They just look at trends, hear what people say. They don't do their own assignment, they don't do their homework. And what is your homework? Your homework is to do your own research. So without much ado, let's take a deep. Welcome back. So this, my friend that came to me, this is what I told her. I said the first thing you have to think about when you are told to invest in a company is to look at the financials. That is the first port of call. Look at how the company manages their money, what's going on in their financials. And how do you do it? Well, you get there, go on their website, go to the investor relations part of the website, and look at what numbers or what figures are there. And one of the first things, the number one financial you should look at, is the revenue. Is this company making money? Yes, the revenue or sales in this case is the most important thing is one of the most important things you have to look at for. Now, you don't just look at the revenue for a year, you look at the growth, year-on-year growth of the revenue. Is this company increasing its revenues or not? That is really important. So if they're not growing, so why do you even want to invest in that company? So that's the first thing. Check the financials, and under the financials you check the revenue, because the revenue is the total amount of what the company can get back from the product or the services they are providing to the market, and that is why they exist. The second thing you want to look at is the income. Now, you look at the gross margin and you look at the income after tax, like after EBITDA, right? And the gross margin is the revenue minus the cost of product, and that gives you your gross margin. And then after the gross margin, you will now have things like cost of goods sold, personnel, training, interest rate, and all of those things, taxes, and then you now have your income. Yeah, these are the things that you will need to look at for in terms of your income, and that's the second thing you should look at. So now you don't just look at it, okay, it's just a figure or something. Again, you have to look at what is the year-on-year growth. Are they increasing in terms of their income? Are they getting better? I mean, if they're not getting better in terms of their income, you want to look at why is that so? What is going on? If their income rate is decreasing, you want to ask questions. Yes, so that is the second thing you want to do. Check their gross margin and their income. The third thing you have to look out for when you're looking at or talking about stocks of company you want to invest would be the EPS, which is earnings per share. And how do you calculate the earnings per share? The earnings per share is the total income that this company have, or total profit after tax, right? After tax, after interest rate, divided by the total outstanding shares of this company. That is your earnings per share. And sometimes it could be that the earnings per share is negative. It could be that. And then you can ask yourself, look at their balance sheet. If they are really reinvesting money back into the business, then maybe it's a good thing, because if they're really investing in terms of, investing in R&D, new product development, then probably that's a good thing. But if you find out that they're mostly, spending money on financing, debt, or some funny things that you cannot explain or cannot really be explained, or you don't understand, then you want to be a little bit, careful. And the good thing about, negative earnings per share is not that bad in its sense. It's just, you just have to keep an eye on it. And if a company is really struggling in terms of getting back into a positive earnings per share, then you may want to, have a second thought about what if you would be interested in that kind of a company. All right, now, so I will just move straight away into the next one, which is cash flow. So cash flow is really important, right? When you are thinking about, again, the finances of a company. So the cash flow is, how the amount of cash coming in and going out for that company. If a company has a negative cash flow, which means that if their outflows, the amount of cash they are releasing is higher than what is coming in for them, it is negative. And that means that they will be under pressure, and which means that it could be that at some point they will not be able to meet their obligations, their financial obligations, maybe be able to pay their debtors or their suppliers, and then people will be on their neck, and this could result into bankruptcy, right? So you want to make sure that your company that you're looking out for is not constantly on negative cash flow, because that is what makes company run. They run on cash, they run on money. And if your company doesn't have money to run, then they're as good as not being in business. And that's the other thing you want to be aware of when you're looking at the financials of a company you want to invest in. Now, the fifth thing that I look out for when I look at the financials of the company, of the stock of the company I want to invest in, I look at their debt to equity ratio. Now, if the amount they are owing is more than the amount of money they have in terms of ownership, it means that their debtors are their creditors are their king, and it could be a signal of financial distress of a company. So I would be really careful in terms of what is the debt to the equity ratio of that company, right? And it could also be different based on the industry. There are some industries that are very, very, very capital intensive, right? They need huge capital to be able to put the infrastructures together. And if they need huge capital, it also means that probably the owners don't have enough money, so they have to borrow money, maybe through bonds or through the banks and all of those things, right? So that could, that will be their source of money, right? But there are some other companies that they're not necessarily capital intensive, but if you see those kind of companies, they're not supposed to be capital intensive, and then they're carrying huge debt in their balance sheet or in their cash flow statement, then you want to be careful. And the good thing about all of these figures I've just named, or I just discussed, is that these days you don't have to calculate it yourself on your own. Most of the brokerage apps out there, whether it's etoro or Trading Republic or Trading 212, depending on which one you use, they would already do some of this analysis. They would already put some of those figures there. Or you can even go into check Yahoo Finance. Go to Yahoo Finance, type in the ticker of that company or the name of that company, and you will see even on Google you will see those figures there, right? And then you can then use those figures to make your own decision if you want to invest in that company or not. 2 more tips before I go ahead on what you need to look out for in terms of finances of a stock you would like to invest in. that'll be the point 6 would be that check the what we call the beta. Now the beta is how volatile the price of a particular stock is, compared to the industry or to the market. Now if the beta is a high number, it means that that price, the price of that company, is highly volatile, right? Which means, and that could cause you if you're not careful, right, it could cause heart pressure, because today you're waking up, the stock is 10 euros, and tomorrow you're sleeping, it's another 20 euros, and then it's just all over the place, like Bitcoin price, right? So you want to make sure, guys, that at least there's some kind of stability in the price of the stock you're buying, because having volatility doesn't really speak well. It speaks to the confidence of people, of the investors of that stock. So it means that, okay, that probably people are not so confident about it, a stock being 88 euros today and tomorrow $10. I mean, it's not so good. So you want to have something that you want to have a particular stock that has more stability, and that way you are able to keep your mind at rest, saying, okay, if at all there is a change in price, it's not going to be a particular threshold that I have set for myself, and it's going to align with the market. All right, the last tip that I'm going to be giving you on the financials would be dividend yield. This figure is also really important, especially if you are thinking of being or becoming a value investor. If you're more of a value investor, you want to be really opening your eyes to the dividend yield. Now the dividend yield is the amount of dividend paid divided by the price of the stock you paid. So, and this dividend yield, so a lot of the investors look at this dividend yield as a very important thing. Like I said, if you're a value investor, you want something that is reasonable enough that within years, when you look back within the years, you will be able to recoup whatever investment you made for that shares. I remember one of my shares that I bought back I think in 2010 or 2009, right, at a particular price, and this company pays crazy dividend like that they pay like 5% thereabouts, and they've been consistent over the years in paying those dividends, right? And I have almost gained back the amount that I put into the stock price. So a time will come when I've gotten so much dividend for them that even the price, the amount of money I paid to purchase the stock, I have recouped my money. Whatever the stock is after that time is basically just extra interest that I'm getting from that stock. And that is how that's why dividend yield is really important. You want to make sure that, okay, they are paying you a good value for your initial investment. I hope that is clear, guys. So that's on the financials that you need to look out for when you're thinking about investing in the stock of a company. The other part would not be, you want to look at the people who are the core or are the fabric that makes up a company. You want to look at the management. What is the management structure like? Is it a management ownership kind of structure, especially when it's a startup company or a tech company? If the management is like really good, they have a good track record, then you are more confident in terms of the kind of results you would get, because then they are more focused, they are more diligent, and they really care about the business, right? They are not careless about their decisions. But if you have management that has shown poor track record over the years, then maybe you want to be if you cannot verify their track record, then maybe you really want to be wary of such stocks and distance yourself from them, because you really want to be sure that you are putting your money into a company that the people at the top echelon are really invested sincerely into that company. Especially in the tech world, when you have an ownership kind of management, right? Like people who really came up with the ideas, the founders are still making decisions, it's a different ballgame compared to when you have outsiders. Another way you can test or you can see what the people fabric of that company is like, you could look at what people are saying about that company, especially the employees. So you go on Glassdoor, look at what the employees are saying about that company. That gives you an insider view about the company. The third broad thing or broad factor you should look at would be product. What is the product that the company is selling? Product is really important because that is the oil, that is the thing that keeps that brings the money. Now, is the product something that is futuristic? Is it something that people will need? Is it what's needed? What value is that product adding to the people? If that product is adding value, like real value to the people, boom, that's what you should be going for. For example, Coca-Cola. I like talking a lot about Coca-Cola because, I mean, what do they sell? Water and some chemicals put together, boom. And people need sugar, right? Water and sugar and some chemicals. People need sugar, and it is something that people will keep drinking for a long while. Maybe another brand will come and knock them off the market, I don't know. But as of today, they're still the king of that jungle, right? So, and that's the same thing. What if your company providing what people need? If the product is what people need, you are in for a good run. And so those are the key things I'll be looking at when I think about investing. And guys, this is really important. Now, if you don't want to do all of these things, if you think it's too stressful for you to be making your own research about the financials or jargons for you and all that, then the last bonus tip I'm going to be giving you is try ETFs. Okay, I'm not going to talk so much about ETFs today. I will make another video on ETFs, and then I'll be stopping there today. All right, guys, I hope you've been able to take one or two things that you work on immediately from this video. Drop in the comment section what is the most important takeaway for you. I will want to see it. And also, go to my description, sign up to my mailing list. I would be sending you letters every week about tips and share things with you about finance and career and all of that. All right, guys, don't go away, stay on this channel, and I'm going to see you in the next video. Bye bye.